Hello, Uncle Jim. Today I want to share with you how I made $500, over $500 in passive income on one trade. I'm going to go into details and talk about one of the safest trades you can make selling a call. So stay tuned. I think you're going to really enjoy what I have for you today. Okay, now before we jump into my actual trade and the details about it, which will be at the end of the video, I do want to talk about a few specifics, some call option details, as I like to put it. First of all, I think covered calls, and in this instance, it's a covered call, are one of the safest option strategies that you can do, and in my mind, it's very and it involves very little risk. And I've had very few calls assigned, covered calls. I did have a few Coca-Cola calls assigned, and that was early in the process, and that was because I really did not know what I'm doing. So now, with the ability to roll, the ability to close early or to let it expire if it's way out of the money, it's worked in my favor. And I didn't know those things when I did get assigned or had Coca-Cola assigned from me. So I will add another video here, a link that goes into the more specifics, the things like, you need 100 shares and the details of selling a covered call. But this video it's not the purpose of this video. So I encourage you to take a look at this other video if you want to learn the basics and you're new to this. So one thing I found with this bear market, and I don't believe we're done with the bear market. It may be a bear market bounce, but we could be done. I think out of the last 10 bear markets, 8 have ended in October. So that's almost an 80% chance. So we'll see. We'll see where we go from here. But because of the Fed still increasing rates, which I think they need to stop or go slower, it's going to take a little bit of time for the market or the economy to catch up to it. But again, that's an interesting statistic. I also believe that during midterm elections, a good number of bear markets have ended also in October. So October is one of those months where a lot of bear markets have ended, and that may happen again. So we'll know after the fact. That's the only way we will know. So with the bear market, what I found is a lot of my calls, and I sell calls almost as much as selling puts, maybe a little bit more puts than calls, but I found almost all of those have gotten profitable again. So for the fact that the stock market has come down, some of my calls are 70, 80, 90% profitable. So I either close them, I roll them, and the one I share with you today, I actually rolled. And the interesting thing is it's on an ETF, and it's not even expiring anytime soon. It was going to expire in January. So we'll go into, again, more detail about that at the end of the video, but it's an ETF with it was looking to expire in January of 23. So you can find profit pretty much anywhere, and you can close things early or you can roll them. And that occurs because, of course, those stocks have dropped quite a bit. Next, you look to roll profitable calls, and that's, it should be part of your management process. So I like to keep track if anything is way profitable, and the easiest way to do that for me, and I'm sure everyone's brokerages do the same thing. I have a section where I can see how profitable each trade is, or each position, each call or put position is, and I just sort that by profitability, and I just look at the ones that are in the 80s and 90s. Some people may even look at the 70s. So, and you might say, well, what is profitability? But let's just go over that for a quick second. So if you sell a covered call and you make $200, and to sell it, it would only be $25 that you would pick up. Well, then you're, almost 75% profitable at that time. I think I did the numbers right. Let's make an even simpler example, because I like to actually buy a lot of positions back when they're 90% profitable. So for $100 call that I sold, meaning I picked up $100 in premium, if I can close it at $10, I seriously look at doing that, or rolling potentially. I found that sometimes rolling is an even better option. Kind of play on words there. And then one thing that I talked about in my last video, I'm going to continue to talk about, is I'm looking to see if there's any great bargains. And instead of buying the stocks, I'm actually buying calls so that I can have these called to me at some point. So I've been looking at that too, and I encourage you too, for any of these high dividend paying companies that have been hit hard recently. Um, you could potentially make some really good money with it down the road when we do come out of the bear market and get into a recovery or a bull market. So, that all being said, let's jump into the next part of the video. I'm going to share with you how I made 500 in just one trade in maybe 15 minutes. So, let's jump into that next section. Thanks. Now, before I jump into the trade, I do want to mention, please subscribe, hit that like button. I'm a small growing channel, and hitting that like button really helps. Also, want to mention I do have some memberships. Details will be below. I've got a basic membership that gives you access to my trades, and I actually put a lot of information related to my trades. I also do a weekly planning worksheet with 4 favorite trades that I'm looking at, and I share that at the top of the worksheet every week. And then the more expensive membership, the traders membership, you actually get access to me each week for 15 minutes or so. Typically they go over 15 minutes, so I enjoy talking with people. I enjoy working with them. So if maybe something you're interested in, so take a look. I'll have more details below. So that being said, let's actually jump into this part of the video. So before I share with you the trade, I do want to mention what it was on, which is the iShares Core S&P Small Cap ETF, which is IJR, and it's a very, it's not an expensive ETF. I think it's got a 0.06 expense ratio. It pays not the greatest dividend, but it does pay a dividend for a small cap ETF. I think we'll look here. So you can see here it's really close to its 52-week low, and actually it's multi-year low. So let's take a look here. So this is for 5 years. So yeah, I guess it's more like it's 2 year. Well, no, back in 2020 it did take a pretty substantial dive, but after that it was what was it, right around where it is today. So yeah, so it going back, it's trended up fairly nicely, and it's now it's down below where I believe it should be. And actually, I there's a podcast I really like to listen to. It's called Invest Talk. If you ever want to find a really good podcast, investing podcast, that's one you can look at. And they talked about how they believe the small cap market has been oversold, especially with core value companies, whereas not so much with the regular S&P. On a basis of looking at where profits will be, it's at a really low level. So I think it's still a good ETF to purchase and sell covered calls on, as well as selling puts on if you want to get into it. And it's got good ratings. I've owned it for a long time. I've been dealing with it. Since I started buying it back almost, I think, 7 or 8 years ago. It was earning around 12% since inception, and it's down below that. We'll look at that down below, but here you can see it's earning about 1.8 dividend yield, which isn't bad. Again, for small cap, it's a small portion of my group of investments, but it's one that instead of trying to find small cap companies to purchase, I believe an ETF is the easier way to go, especially with small caps, because they're a lot harder to do the work on. Here's just a list of the different companies and what segments. So they're in real estate, energy, materials, healthcare. So unlike the S&P 500, which some of the biggest players again are technology, there's not a ton of technology here. And then you can see since inception, it's currently 9%. Well, that was 12% before the bear market. You can see for the year, it's down almost 18%. So I believe it's a bit oversold. So getting into it around this range, does make sense. Especially if you can pick it up a little lower than where it is now, maybe around $80 a share. I believe it's what it $90.66. So, and again, I've been trading it for many years. I also trade its sister fund, the IGH, not GJ, IJH, which is its mid cap ETF, and I also sell and buy shares of it when the market's down. So I haven't bought any recently, but I'm looking at potentially buying it depending on if we're fairly close to the bottom, which I think we are. So I probably will going forward buy some more of this as well as buy some more of the mid cap. So that being said, let's jump into the final part of this video where I'll share with you my trade. Okay, here's my actual trade that I did earlier in the week, and I decided to do screenshots to keep it a little bit simpler and shorter in the video. But I actually have 300 shares in IJR, and again, I've been accumulating them over many years. So I've been typically selling calls a couple times a year and doing quite well with it. And since it's in a retirement account, I don't get hit with taxes. So what I decided to do, because these were very profitable, was to close them and to roll them. So the first, the top level buy to close were 3 contracts, and again, these already existed. So the bid and ask was 20 to 50, but I actually did a little bit better than that after this was executed. And then the new expiration, so these were expiring in January 23, and so they still were a ways off, and I rolled them literally 4 months and picked up quite a bit of income for it. So it's interesting how you can really pick up some nice income moving things around that you already have. So I encourage you, just like I mentioned earlier, look at anything that's profitable that you might be able to move around. So you may find some extra cash out there that you weren't aware that you might have. So in this case, I only rolled it out 4 months and picked up per contract 145. And again, I did better than this, and we'll see that at the end. But I wanted to talk about, I did drop the strike from 115 to 110, but you can see its price is currently 92. So the 110 was still at a 20 delta. So let's go back here, and I also did a screenshot of the chain. So here you can see the 115 was literally only a 6. If you look here, was don't want to do that. It was only a 6 delta. So a 94% chance it would expire outside the money. So almost, it wasn't my 20%. I could have also moved it down to 110 and picked up some cash, but nowhere near as much as rolling it out 4 months. So here a 15 delta was at the current 115, so I could have still made money by rolling it to 115. But when I looked at it in details, I doubt it'll go above 115, especially in this bear market, but it might, and I should be able to roll it if it does. But at this 22 delta at 110, it had some pretty good income, and that's what I decided to do, was to use the 110. So that worked out in the trade. So again, let's go back to the trade. So here you see the 110. So in my mind, I'm not taking up much more risk. It would have to go up nearly $18, which is a significant return in less than, what is that, about 8 months, 7 months. So I believe it's doubtful. So in my mind, this is almost free money. So let's go over so I reviewed it, and it was showing 431. And then when I actually ran the order, and this is just, they're kind of guaranteeing this, and they're showing me what the fees are. Since it's 3 contracts, the fees are a little bit more, but compared to what they used to be a couple years back, this is so much less expensive. And then here's the confirmation. So it was rolled, and I was able to close it for 35 cents. So you saw this, it could have been as high as 50 cents. So I saved 15 cents here, so there was some improvement. And I picked up 205, where when you look at the 3 contracts, so multiply this by 3, it's and $15 minus, what is that, 105? And that's where in the end it was 606, not six, $506. So I got improvement on both sides. So it worked out really well. So I encourage you, as you're buying things and as you're building, some of these or putting money into these ETFs, that one great option is to, again, another play on words, but is to sell covered calls on these ETFs. And I've done really well with IGR, or I keep saying G, but it's J, and I also have done well with IJH, which is the mid cap. Um, I have more than doubled, maybe even tripled the dividend. I believe this is the second trade for this, or third trade for this one this year, and I think I brought in over $1,100 in those three trades. So I hope you enjoyed this. Hope you found it interesting. As always, if you have any questions, I try to answer all my comments. I actually will go back and forth with people some. So I encourage you to leave a comment, and I hope you have a wonderful day. Bye bye.